So the question I just got is they're asking me to state my background and share my story of how I got into cryptocurrency. So I originally started with studying economics. I did a master's at Manchester University and a degree at Kingston in economics. And I disagreed with a lot of what I learned in that economics. I thought it was based upon very unsound assumptions. And I also noticed that economics was being used to run economies on the largest scale all around the globe, and yet no economist actually agreed with each other. You had the classical school of thought, you had the Austrian school of thought, you had the Keynesian school of thought, you had the Chicago school of thought, you had the neoclassical school of thought, and nobody had actually solved which school of thought should be used to model an economy. And so I found it fascinating and amazing that these models that no one had resolved were actually being used to experiment with fiat currencies, financial systems, and countries at the global macro scale, even though they still had their issues and were based upon unsound assumptions. I also noticed that the assumptions about how money was created were kind of ignored from many economic models, and they made some incorrect assumptions. They originally assumed that a bank was an intermediary between a borrower and a lender, which they're not anymore. It's not a piggy bank. Banks actually create money in the vast majority of the supply, and they invented government-backed digital currencies because all money is digital with the exception of notes and coins. And so that model is inaccurate. Then further models started to implement it, for example, a multiplier effect, where they said, okay, well, the government creates a base of money and then banks multiply that money many times over. And therefore banks create digital currency, but it's set, the government still controls it. When I studied this a little bit more, it turned out the government doesn't control that because banks can simply create as much money. And then you hear things like conspiracy theories talking about fractional reserve banking, where actually the money is created by the banks and they hold a fraction on reserve and they multiply it many times over. Well, I actually studied this and I realized that they don't actually hold a fraction, and they don't actually, and there is no reserve. So even that was incorrect. And so I got distracted and went into investment banking. I spent 2 or 3 years working in trading as a market maker in London for an investment bank on the London Stock Exchange. And then I went into corporate finance. And after working IPOing mid-cap companies on the London Stock Exchange, I decided that I really wanted to return, and I was getting distracted at the investment bank, and return to my passion. So I started studying money again and giving lectures on money. And at this time it was 2006 and nobody really cared. But then the 2007 Northern Rock events happened and the subprime crisis in 2008, and more people got interested in what I was talking about. So I wrote a book called Bank to the Future, which was about forecasting many of the technologies that were going to have an impact in the financial system. Because of that, I went to Occupy London and I met somebody that invited me to speak at the very first Bitcoin conference in the world. And I spoke there in Prague, and Bitcoin had crashed to $3 at this point. It was sponsored by Mt. Gox. There was a startup called BitPay pitching there, Tony Galippi there, and Max Kaiser and myself gave a panel. And I was hooked into the industry ever since. I went there with the co-founder of BnkToTheFuture.com. We were working on building an online investment platform at the time. And my co-founder, Bliss Dixon, was very intrigued by the impact that Bitcoin was going to have. And we started looking at the sector a lot more. And then you fall down the rabbit hole that many people fall down as you start to see this industry grow from about 40 people in a room to where the peak in 2017, and then many bear markets in between, and what we believe is happening next as well.